I mean, look, all of the settlement that used to be done in dollars, or the transactions that were done in dollars, will now be done in central bank digital currencies, and all of the settlement and reserves that used to go into treasuries will now go into gold and into commodities. So it will substantially affect the value of the dollar. The all at once moment, not sure, but I think you'll start feeling it faster than you think. And the problem is that as this accelerates and there is no demand for our treasuries, who finances our $1 trillion a month debt binge? Who finances, even if we were balanced budget right now, the 200 trillion in funded and unfunded liabilities? And so inflation has to happen.
Okay, today we've got Andy Schectman back on the show from Miles Franklin. Andy, thank you so much for coming back on, my friend. We've got a ton of stuff to talk about today. So I'm super glad to have you on.
Yeah, man, likewise.
All right, well, let's just dive right in, Andy. What are you seeing out there in terms of the economy, in terms of broad strokes? Again, it's been about 3 weeks. Last time I had you on was at the tail end of June. So what have you seen kind of transpire since then?
Well, I guess obviously the elephant in the room is what happened last Saturday, President Trump. I've talked a lot about what's happened in this country, wondering if it's too stupid to be stupid. The open borders, the lawlessness, the questions surrounding the judicial system and the electoral process, the immigration process, all of these things that made this country great. Throw on top of it the wokeness, the break away from the nuclear family, all of these things that, where merit is thrown out the window, and instead it's lifestyle preferences that Trump. These are things that to me have made me really angry in the past. We're supposed to believe that the entire left-leaning media establishment just realized, including Jean-Pierre, the press secretary, just realized that that Biden is slipping mentally, cognitively. They haven't noticed it over the last 4 years, but we're supposed to believe that just, because of the debate. Well, now they do. It's wholly and incredibly insulting to believe this, just as it is to believe that the roof was too slanted to put a sniper on to protect the president from 120 yards in a direct line of sight. Too slanted, she says, the head of the Secret Service, who prior to this ran head of security for Jill Biden, and this incestuous swamp that of sleaze that continues to do these things right out in the open now is becoming more and more concerning. Be that as it may, I think it's hard to ignore it and not talk about it. But I think what I have seen over the last several weeks, there are a few things that stick out to me. One would be, of course, Saudi Arabia warning the G7 against stealing the 300 billion in Russian assets. And if they do, they will start dumping their European bonds, starting with those issued by the French Treasury. Very big deal. I would also say one of the things that I've seen that's really been sticking out is the massive amount of gold and silver that is leaving the COMEX and the LBMA and the Shanghai Gold Exchange. For the June delivery month, we saw more than 30,000 gold contracts stand for delivery. Each contract is 100 ounces. Who's got the kind of money to stand for these deliveries? But something really stuck out. And that was a group called Zhongcai Futures, ZHONGCAI Futures. I don't know if you've talked about that at all or not, but over the last month or so, China has been taking delivery of gold out of New York. Lots of it. A month ago, 2 months ago, we saw $500 million worth of gold in kilo bars delivered off of COMEX. And that's interesting, too, because COMEX pretty much only deals in 100-ounce bars. But the mini contract are kilo bars. And the CME group, which is COMEX, designed a contract in 2015 that allows for delivery to Brinks, Hong Kong, which is a COMEX facility. 500 million in kilo bars was delivered about 6 weeks ago to brings Hong Kong, and any metal that comes into China has to run through Shanghai first, and so it gets delivered then to Shanghai Gold Exchange, where it's presumably being farmed out to all of the entities standing for delivery there, which is a cash and carry market. You pay, you get your metal. But this amount of gold that we've been seeing leaving New York to China is beginning to become a little bit alarming, and we're seeing this drawdown, not only in Shanghai, but first the metal coming from New York. And what's interesting about this is that uh, as of July 9th, Shanghai futures had 31,000 long contracts across all different layers of time, with a margin of approximately 21 billion yuan, or 31 tons of gold. And they also have massive short long positions in the silver futures, and they're standing for delivery. The counterpart to Shanghai futures is JP Morgan, who's now short gold and silver, getting crushed. And I've said for a long time, the way that these countries win is by standing for delivery. They stand for delivery because no one ever did. In all the years I've done this, 1% of contracts would stand for delivery. And going back even 15, 20 years ago, a lot of these countries were borderline third world. They didn't have the sophistication, the wealth, or the desire, or the wherewithal to stand for delivery. They are now. In the first few days of the August silver contract recently here on COMEX, we saw 5.71 million ounces delivered just on the first day to a company called PTG. No one knows who the hell PTG is, but they just took possession of 5.71 million ounces of silver. Who's got that kind of bread? Who's got that kind of storage facility? At the same time, we're seeing huge drains on COMEX, SLV, other ETFs, GLD. The Shanghai Gold Exchange just published their weekly inventory report and showed last week 215,355 kilograms of silver were delivered off of the Shanghai Metals Exchange. That's 7.6 million ounces. And you put that number in perspective, that's 60 adult African elephants or 105 cars. And so who is draining all of these exchanges? We see the head of the Polish Central Bank, who's been talking for years about what gold represent to Poland, saying that they've been buying gold for quite some time. In fact, they were the second largest purchaser of gold here, buying 10 tons in May, but the second largest purchaser of gold globally in 2023. He said that these purchases will continue and for some time. Turkey bought 6 tons. India bought 4 tons. Czech Republic bought 3 tons. In fact, India bought 1.5 times the amount of gold that they bought all of last year in the first 4 months of this year. And they repatriated it and 100 metric tons they've been keeping at the Bank of England since 1991. And I think it's important when we talk about repatriation, those who don't know what that means, that would be bringing it home, in essence, bringing the gold home that they've been leaving at the New York Fed and the Bank of England for decades. Why? The New York Fed and the Bank of England, United Kingdom, the United States, safe, stable jurisdictions, Western rule of law, and direct access to the COMEX in New York and the LBMA in England. Over the last several weeks and or years, if we go back to 2017, where it all started, just doing a quick search popped up Germany, Austria, Slovakia, Argentina, Netherlands, Saudi Arabia, Hungary, Belgium, Egypt, Senegal, Romania, Nigeria, Poland, Ghana, India, Turkey, France, Serbia, Venezuela, Algeria, Cameroon, South Africa, Czechoslovakia, and on and on. All of these central banks have not only been wickedly purchasing gold, but all of them have brought their gold home, all of them, repatriating it from the Bank of England and the New York Fed. Now, the easy answer is, well, it's counterparty risk, Danny. That's what it is. You're stealing stuff from these countries. So, we can, as the world reserve currency, make declarations where if Xi Jinping gives 1 penny to the Russian war machine, we will sanction their banks, their companies in Beijing itself. That's what Janet Yellen said. But doesn't matter that we've given F-16 jets, Stinger missiles, the intelligence on where to fire things, and $260 billion in funding, much of which was in military equipment with no congressional oversight. We can do that because we're the world reserve currency. So our doesn't stink. So we can do that. But that level of hypocrisy and sanctioning and confiscating and defaulting, if you will, on $5 billion in Russian treasuries is it's just too stupid to be stupid. But it's not as, I think there's more to it, I guess is what I'm trying to say. And, last time I was on with you, we talked about Project Enbridge. Project Enbridge is a cross-border payment system. It was developed by China, Hong Kong, Thailand, and the United Arab Emirates. And now we find out that the Bank of International Settlements is behind this as well. The BIS is the group that reclassified gold tier 1 in 2019. And if we go back to 2017, the way that the BIS does things, we see the Bundesbank, Hungary, Turkey, Poland, Austria, the Czech National Bank, the Dutch National Bank, they all repatriated their gold in 2017, really weird, out of the clear blue after selling gold for years. In 2018, those same banks bought more gold as a group than they did in the 60 years previously combined. In 2019, that number doubles by 100%. And then they miraculously, the BIS says, oh, by the way, guys, gold is now the only other tier 1 reserve asset. So if you believe they weren't told about this, I have a bridge to sell you. Now, I want you to think about what's been going on over the last 2.5 years. Over the last 2.5 years, there's been more gold buying by central banks than at any time in human history, or in central bank history, I guess, to be more accurate. And in 2023, it was the most gold ever bought by the central banks in the first quarter, only to be outdone by the first quarter 2024. The central banks are increasing their gold purchasing, but they are repatriating their gold as well. Just a few weeks ago, Saudi Arabia, Egypt, Senegal, Nigeria, Ghana, Cameroon, and South Africa all brought their gold back from the New York Fed. I mentioned that the Bank of India brought back all their gold that they were holding since 1991 at the Bank of England. All of these countries are repatriating their gold. All right, so now let's go back to Project Enbridge, which we see is a BIS initiative along with China, Hong Kong, Thailand, United Arab Emirates. Saudi Arabia, the largest producer of oil in the world and the head of OPEC, just became a full participant in Project Enbridge, which is not compatible with US dollars. It is not compatible with US dollars. And there was a meeting in Russia about 3 weeks ago in Novigrad, and it coincided with the G7 meeting in Italy. The Royal Crown Prince was invited to the meeting in Italy, and he turned it down. Sorry, he said, I can't make it. But he sent his finance ministers to Novigrad, to the Russian meeting, the BRICS meeting. And two things come out of this meeting that I think are worth talking about. One massively, one interest. The interesting thing is that 59 countries said we're going to join. We'll find out in October which ones those are. But 59 more countries said we're going to join the BRICS. But the very interesting thing that came out of it was a meeting, two meetings between Putin, Sergei Glaziev, and Dilma Rousseff. Everyone knows who Putin is. Sergei Glaziev is a Russian finance minister, and he's the finance minister to the Eurasian Economic Union. I've been saying for 3 years, the Eurasian Economic Union and the Shanghai Cooperation Organization will join the BRICS, and they will. The Shanghai Cooperation Organization, Iran joined, and so did Saudi Arabia. It's the largest regional financial and military organization on the planet. And the Eurasian Economic Union are all the countries that end in STAN. And they're all either part of the BRICS, part of the Belt Road, or will be soon. And so Glaziev is the guy, the architect of the BRICS settlement currency. He's been talking about for 3 years. He's the one who said it'll be a basket of currencies of the BRICS countries and a basket of commodities. And I've been saying forever, it's got to mostly be gold. It's the only other tier 1 asset, right? It's just, it has to be. So this meeting the third party was Dilma Rousseff. Dilma used to be the president of Brazil. Dilma is now the president of the BRICS New Development Bank. She came out of this meeting and said it has been decided in principle to a new settlement currency called the unit. And the unit will be traded over Project Enbridge. Remember who's behind Project Enbridge, including the BIS. Remember the way that they told these countries, obviously, to buy gold and bring it home prior to its reclassification as Tier 1? Think about all the banks that have been buying gold over the last 2.5 years and repatriating it. All right, so now gets the interesting part. It's traded over Enbridge, which the US dollar is not compatible with. Saudi Arabia just became a full participant. It will eliminate the ability for the West to sanction. The unit currency, as announced, will be a basket of 60% local currencies of the BRICS Plus nations, 40% gold, deliverable in kilo bars. All the gold that's been delivered off of COMEX, it's in kilo bars. And what's interesting, maybe the most interesting part about it, remember all these countries I've been saying have been repatriating their gold? The unit currency will be a token that will be minted in each country. 40% gold, 60% basket of local BRICS Plus currencies. That gold, which will comprise 40% of the token and the currency, are taken out of circulation and put into in essence, an escrow account within the borders of the countries who possess the gold. Now, the gold is deliverable on demand by these countries who will mint their own tokens. So these countries will not have to send their gold to a central location like Beijing or Moscow. They will hold it themselves. It will be audited, significantly audited by independent auditors with tremendous penalties for deviating from the unit protocol. But what it does is it eliminates the need to send these countries gold to any central location like the Bank of England or the New York Fed, the way it used to be, in this case, to a central location for the BRICS. All of the countries, instead of having a BRICS currency, will be able to maintain their own central bank digital currency. Digital yuan can trade with the digital real with Brazil. They can go back and forth, but any settlement done in energy or to whatever degree they want to use the unit token, they will be able to do so with the ability to stand for delivery on the gold backing it. And when you realize that each country will have their own monetary authority and autonomy, the ability to trade over Enbridge, which is not compatible with dollars, which allows countries to maintain their own monetary autonomy and settle in a gold-backed currency, if you will, that they hold within their own borders. Well, do you think there's any coincidence with the massive accumulation and repatriation of everybody's gold when Project Enbridge is backed by the BIS, who did the exact same thing right before they reclassified it Tier 1? What this will do will be completely eliminate the need to stockpile U.S. treasuries, which will push rates to the moon ultimately, and it will completely eliminate the need to stockpile U.S. dollars for settlement. And I did an interview with a very smart man yesterday named Vince Lancy, and Vince said to me that he believes that the Chinese who, they think about all the gold that has been delivered by that group I was telling you, Shanghai. Well, that's a proxy for the PBOC and People's Bank of China. And when there's been articles out there that China stopped buying gold for 2 months, well, bullshit, they did. They're buying it through the proxies like Shanghai. If their commercial proxy banks buy gold from the refineries in South Africa or Switzerland, they don't have to tell the IMF. If they buy gold that's not 995 pure, they don't have to tell the IMF. They've been mining between 400 and 500 metric tons for 25 years. They're the largest producer in the world. They don't tell the IMF that. We're supposed to believe they only have 2,600 metric tons of gold. Alistair McLeod says they have 40,000 just in their domestic production alone. And in all the gold that they have been buying through their proxy banks and delivering through their proxy banks on behalf of the PBOC, none of that's reported, so much so the IMF just came out and said China is way understating their gold. Why would they? If gold is going to back a new system, right? He says to me, Vince said that China and India and Russia will do all they can to peg their central bank digital currencies to gold at the same time, because then it will comprise the majority of the currency units within the BRICS plus currency basket. And they're the ones accumulating it all. And so when you see, and people say, well, how do we know the numbers they're saying are right? Well, they're not any more right than, the 8,300 metric tons the United States is supposed to have hasn't been audited since 53. And when Ron Paul has petitioned to audit it, he's been turned down twice. So I guess what I'm trying to say to you, Danny, is that we are on the cusp right now, maybe the foothills, if you will, of some really scary shit, whereby the dollar is on its way out. I think the death warrant to it has just been signed. And if indeed they do come in October and announce officially that the unit will be their settlement currency of choice, you will see a dumping of treasuries and a dumping of dollars, which will start slowly. Maybe they're already doing it, and accelerate to a degree that we can't believe, because it already is. As China has been dumping treasuries from 3 trillion to 700 billion, Saudi Arabia dumping, Japan dumping, Russia dumped. All of these countries are dumping, and they're buying gold instead because it's the only other tier one asset, and they know it will be part of this new system, and they're bringing it home, like India. So as the West has to find someone to sell their treasuries to, because we're creating $100,000 of debt every second, which is $1 trillion every 100 days, 100, 200, 300, 400, 500. I mean, keep going. And is it absurd? Hell yes, it's absurd. And what's that? $6 million a minute and 60 minutes in an hour. That's 360 million. And, I mean, the numbers are just absurd. And they're getting so out of control that this ain't going to stop. And I think it's very, very important to understand that the incentive to hold U.S. dollars is dying. The incentive to hold U.S. treasuries is basically dead. But so who's buying our treasuries? Oh, well, we're supposed to believe it's the United Kingdom. They're going to quickly be number one in treasury holdings. They're a broke country buying our bonds of an even more broke country so that we can pay the interest on the debt we've issued long ago and buy commodities from the BRICS countries, who take all of those dollars and used to put them into U.S. treasuries. Instead, they've been selling treasuries and buying gold because it will back a new system. It's a doom loop for the dollar. The more we buy in commodities from the BRICS nations, the more they divest of the dollar and buy gold, which dumps the value of the dollar, pushes up the value of gold, which will be the primary settlement currency. The United States has virtually nothing, the West has virtually nothing in the way of commodity and commodity development. We've mothballed everything. We don't have the commodities that we need. China produces 80% or mines 80% in the Eurasian continent of all the rare earths. And in last year, they refined 100%. We haven't thought this stuff out very well. And so when you talk about a transition to commodities, we have nothing in the way of manufacturing capacity. We've outsourced all of that. We have very little when we put it together with the UK and all the other Western G7 countries, very little in the way of natural resources. Who's got it all? Oh yeah, it's those BRICS countries. And who's been buying it all? Oh yeah, it's those BRICS countries. And who's been taking possession of the gold? Oh yeah, it's those BRICS countries. And so to dismiss what is happening is a massive, massive, massive mistake. I look at it as probably the biggest event of my career when you see, in essence, the head of the New Development Bank, the former president of Brazil, say, in theory, we have agreed to a new settlement currency, and here it is. I read the white paper. It'll blow your mind if you do so. It's about 50 pages. You put that together with Enbridge, which is non-US dollar compatible, and Saudi Arabia became a full participant. You can look at Occam's razor. Sorry to monopolize all of this time, Danny, but you can see how real this is becoming, man. I hope your listeners do as well.
100%. And so when you talk about dumping the dollar, heading towards gold, the release of the USD as the world reserve currency, if you look at the British sterling, it took about 2 to 3 decades to unwind that. How how much time would it take, in your opinion? I mean, I'm not, this stuff is kind of murky. It's not an exact science, but like, how much time do you think it would take to unwind the dollar from its world reserve status, given past history?
I would say it's already lost its hegemony. It has not lost its supremacy yet. But I think what starts out as a slow trickle turns into a much faster move. I mean, it depends to what degree we see things unfold with the BRICS. I mean, at 10 countries right now, we're a ways away. 59 countries said they want to join. I mean, as it is with the 10 already represent a bigger slice of GDP, human population, military might, two of the three largest nuclear arsenals. Add 59, you're at 69. Add the Shanghai Cooperation Organization and the Eurasian Economic Union and the Belt Road Initiative, you're talking 90% of human population, and then it's like that. So that's why I've always liked that term, logarithmic decay, little by little by little by little by little, then all at once. We're not at the all at once moment yet. And to show you how much I like it, I mean, I had a painting made, if you can see that, little by little, then all at once. I don't know if you can see that.
Which one is it? The one on the
That one. Little by
Oh
little.
yeah, I
then
see it
all
now.
at
Yeah.
once. It's a graffiti painting.
Yeah.
But it means a lot to me. It does. That term signifies a lot to me. Sorry about that. I don't know how fast it unwinds, Danny. Slowly at first, then all at once. That's how Hemingway say he went broke. Slowly at first, and then all at once, and little by little, then all at once. I guess you could say a lot of these countries are doing this slowly right now. They are de-dollarizing and de-treasurizing. I know that's not a word, but they're selling dollars and treasuries and buying commodities. It's that, a 70-year, 50-year rather, trend or system doesn't unwind overnight, to your point with the pound sterling. But, I don't think it's the death of the dollar yet. But what it is, I mean, look, all of the settlement that used to be done in dollars, or the transactions that were done in dollars, will now be done in central bank digital currencies. And all of the settlement and, reserves that used to go into treasuries will now go into gold and into commodities. So it will substantially affect the value of the dollar. The all at once moment, not sure, but I think you'll start feeling it faster than you think. And the problem is that as this accelerates and there is no demand for our treasuries, who finances our $1 trillion a month debt binge? Who finances, even if we were balanced budget right now, the 200 trillion in funded and unfunded liabilities? And so inflation has to happen. It's either the Fed, which is the most likely, or they funnel money under the table to countries like Ireland and the United Kingdom and say, here, buy our treasuries, make it look real. Because who the hell wants to hold 10-year treasuries in a country that has chosen inflation over austerity, creating $1 trillion in debt every 100 days, weaponizing the treasury market? And why would anyone hold treasuries of any duration when we've proven that can be deadly? And we let interest rates rise 500 basis points in a year after keeping them zero range bound for a decade, 15 years, and screwed everyone who held treasuries. Well, my feeling is that as the world dumps dollars and treasuries, rates go higher than anyone can think possible. That's the Great Reset. And so I don't know how fast that happens, but when treasury rates spike to the moon because no one is buying the duration treasuries, except maybe the Fed, which means monetization of the debt, or Weimar Republic, all roads lead to the same place. And if rates spike in that environment, then everything opposite it collapse: stocks, bonds, real estate, the banks, the insurance companies. That's the Great Reset. And that's the path that I've gone down for so long, thinking, well, this is how you blame a victim, or you become the victim and blame a villain for doing this to us, instead of looking closely at the fact that we've created so much debt where we have so mismanagement, the privilege of being the world reserve mismanaged. It's obscene. And, just like the public believes that the left just noticed that Biden has lost his faculties, and just like they believe that putting a sniper on a slanted roof was too dangerous, from 120 yards in a direct line of sight to the president. So we'll let someone else, some kid climb up there with the AR-15, get through all of the security and somehow make it up there. Supposedly snipers and cops in the building underneath them, which is just a bunch of horseshit. Sorry for my language, but it's so aggravating to me, Danny, that they think we're that naive to believe these things. And that's the sad state of affairs. Well, maybe that's what they're banking on for incentivizing a villain to do this, or creating one rather, and incentivizing the world to coalesce this way. So how fast, I don't know, but I think it's inevitable that something along those lines happen. Especially, God willing, God willing, we see an election in November, and we see a change of administration. But if we don't, we can see that 1/8 of an inch separates chaos and not. 1/8 of an inch separates a challenge to the system and not. If it hits him, what's Xi Jinping and Putin talking about today? And so, I don't know. I guess a lot depends on how the election plays out. And I'm not saying that Trump will fix everything if he got in, but I think we have a much better shot at mitigating, how bad things could possibly get and how fast it could accelerate. But if Trump were gone, I think it would happen a lot faster than people think.
Yeah, we were just on the brink of, as cliche as it sounds, I mean, you've heard this a million times. We were on the brink of civil war had it not been for 1/8 of an inch, like you kind of alluded to there. My question to you is, being on the ground floor as a gold dealer, running Miles Franklin, when that event happened, like, did you guys see a surge of traffic when it came to gold and silver buying? Because what I'm trying to get at here is, these black swan events, they're only going to increase as we move forward. And gold tends to capture those moves, right? So, from your side, from the gold dealer side, like, what did you guys see, like, in the days after that event? Like, did you see an uptick in traffic? I mean, gold hit an all-time high yesterday, right? I can't help but think that it's somewhat connected to some of the tensions in the air right now. But I'll let you answer that, Andy. What have you seen so far?
Not as much as I mean, there were some big orders over the weekend, but not as much as I would have anticipated. But if you use a different example, that would be Silicon Valley Bank and Signature Bank failing last April. We added 14,000 clients in 45 days. That's over 4 or 5 years worth of client additions. That's how fast it can happen. I think that the world was kind of shocked by what happened and wondered how the markets would open up and react. Yes, there's been an uptick for sure, but not as much as I would have thought. So yeah, it's coming, but maybe if he had been shot dead, it would have been different.
Yeah, and that's the point. Like, any day, anything like that could happen. And who knows what happens to who knows what happens to society, and then ergo what happens to the price of gold, right?
Right. Well, and yeah, the price of gold at all-time highs. At the same time, you have positive real yield. I mean, forget about the lying CPI numbers and the lying, inflation itself is just completely a lie. Inflation's 11 or 12%. I brought my in-laws and one of my kids and my wife to dinner last night. One drink. I had one drink. There were 3 sodas, 1 drink, and 4 dinners, and 5 dinners, excuse me. It was $360. Oh, wow. It's like, there's inflation. I don't care what people say. I mean, and ironically enough, food is not in the CPI numbers, nor is housing or energy and the things that are inflating. But, I don't know, man. I just think that this will spin out of control very, very quickly. And when that happens, whatever the event is that triggers it, the allocation of precious metals to the financial matrix, from Joe and Jane Sixpack to the Harvard Endowment Fund, is less than 0.5%. And it doesn't take very much money, really, or interest by the public to jump in and completely overnight drain the whole system. Where we have, 5% interest, 5% allocation, that's a 10-fold increase in demand, and overnight everything's gone. So, I mean, the only way to really succeed in any investing is to be proactive. And I find it interesting that the most well-funded and well-informed traders in the world, the central banks, they're loading up. So we have positive real yields. We have a strong dollar. We have outflows out of the ETFs. We have tepid demand in the retail market, and yet gold's at all-time highs. Um, I thought that logic would say that should be going the other direction. So add in a voracious demand by the American public with all the money that they have tied up in other asset classes when they realize, oh my God, what am I doing? I need to have some metals. There'll be none to be found. That's how fast it will happen. Even though the market's flush with product right now, I've said forever it will be defined by the inability to source product, because if things were to get that crazy, you have two mints in the United States, I mean, in North America, Canada and the US, handful of refineries. The rest of them, South Africa, South Africa, Australia, Austria, the United Kingdom, and all of the refineries around the world that are not in North America. That's it. There is no bull market like a gold bull market, Danny, because every other one speaks to your desire to make money. That's greed versus your desire to protect, which is fear. Greed and fear are the motivators, and people watching the price of metal go higher or the world gets scarier only tightens the grip on it. They don't want to sell it, go back into dollars, into the system. That's why there is no bull market like a metals bull market, meaning the secondary market dries up. And when the new stuff is gone and these other countries become protectionist and start to stockpile and keep their own metal and give it to their own countrymen or hold it themselves for the government because of change and instability, just like that, it's gone. And so I think the whole point is to be proactive the way that the central bankers are. And that's why they've been gobbling it up for the last several years and repatriating it, removing any and all counterparty risk. And that's a beautiful thing. Tube of gold eagles right here. That's $50,000, that little palm of my hand.
Right.
The only counterparty risk is someone trying to take it from me and all my guns. But the lack of counterparty risk to the system is profound in this environment. So yeah, I think the big money, who is not only the most sophisticated and wealthy, they're the most well-informed. And they've been buying it as the American public has been selling and going into the shiny objects like Nvidia and Bitcoin and Apple. And I don't blame them. The returns have been great, but the biggest money in the world is saying, well, you guys do that and we'll do this. And that's what they're doing. It's a system that will be defined by commodities, transparency, and lack of counterparty risk, rather than by opaque debt instruments by an insolvent government or stocks that are held that can be taken from you. If your listeners haven't read The Great Taking by David Rogers Webb, I suggest they do. Go to YouTube and watch the hour-long video and try to keep your dinner down after that. So again, counterparty risk is something that I think will take on a very ugly meaning, much more ugly than it already is right now in the future, because of how systemically tied together everything is.
Yeah. So, Andy, what we've been doing the last several episodes is I've been asking each and every one of my guests. I mean, it's interesting you brought up The Great Taking, but I've been asking each and every one of my guests to provide a book or a list of books that they'd recommend the audience dig into to educate themselves. So I'm going to pose the same question to you. What are some what is a book or a list of books that you would recommend the audience look into?
Well, for sure, The Great Taking, The Creature from Jekyll Island. If you want to understand just looking at my bookshelf right now, The Creature from Jekyll Island, I have 2 copies of it right there.
Nice. The Edward Griffin. I interviewed him a while back.
Yep. I mean, that's a big one. I personally have gotten more out of, you'll laugh, but maybe more, I've gleaned more from The Art of War than just about anything I've ever read. It was written in the 5th century by a Chinese military strategist named Sun Tzu, but it's mandatory reading at West Point, at CIA. Bill Belichick reads it for formulating game strategy. It's It's taught at most major business schools in the world on corporate hierarchy. It's taught in most major law schools on formulating arguments. The whole idea is to beat your opponent without throwing a punch. It's misdirection, and misdirection is everywhere when you see it. If you don't look for it, you don't see it. Even in any game you've ever played, think football. They have plays called misdirection. The whole line goes this way, the tight end slips out that way, he's wide open, and everyone's over there. Think about baseball, the squeeze bunt. Think about chess. You flank your rook up this way, and the queen goes that way. Everything you do in games or in anything, whether it's an adversary or an opponent, you misdirect, and the no look pass in basketball. That is misdirection. I've gotten so much out of that book I can't even tell you. But I guess the two that come to mind in terms of economics for me would be the Great Taking because of its broader implications, and the Creature from Jekyll Island because you'll understand what the Federal Reserve is, which is neither federal nor a reserve, and how scary it really actually is.
Gotcha. So we'll have a link to those down below, guys, if you want to check them out. My next question to you, Andy, is so what I've been doing as well is I've been asking my guests to ask my next guest a question. So if there's a question that you'd like to pose to my next guest, what would it be?
Well, I don't know who your next guest is, but I mean, that's a good one. I don't know. I guess I'd like to know what they think, where they think we are in the cycle. Where are we going? What do they think of the BRICS? What do they think about what's happening inside this country? Is it planned? I mean, I've been one of the few to have the courage or the stupidity to say this is all planned. Either that or it's completely stupid, the things that we are doing. So stupid that it's ridiculous. I guess that would be the big question. The speech that I gave in Boca at Rick Rule's conference, I wanted to call it, "Is It's Too Stupid to Be Stupid?" But instead I called it, "Is It Too Foolish to Not Be Planned?" And when you look around and you see weaponizing the dollar in a very hypocritical manner, sanctioning countries all around the world, stealing the Russian assets, funding the Ukraine to the tune of $260 billion, letting the country fall apart the way that it has, having the head of the Secret Service say we didn't put someone on that roof because it was slanted. I mean, all of these things, are you kidding me? Having the left media say they just figured out Biden was mentally compromised.
Did you see the short interest on DJT, Truth Social, the day before the actual attempt?
No, I did not.
Yeah, apparently there's a huge short interest right before the day before the event.
Yeah, hopefully they all got their ass handed to them.
Yeah,
hopefully it went the other
truth.
way.
What's that?
Hopefully when they missed, it went the other way and they all got their ass handed to them.
Yeah, for sure. But yeah, I mean, there was someone there shorting Truth Social.
Yeah, well, just like you had the exact same thing, as horrible as it is to say, with United and American Airlines the day before 9/11.
Yep.
And so is it too stupid to be stupid, or was it planned? That would be the question I would ask. That's the question I'd want to know more than, am I really one of the only people who has the nerve or the stupidity to say this is all planned? It just, could we really be that far gone to think that all of these things that we have done and allowed to happen would not have ramifications? I mean, listen to this, man. Just to give you an example of the ramifications. Here's a list of companies that have recently exited or have just announced plans to leave San Francisco: Nordstrom, Old Navy, Banana Republic, Gap, Target, Anthropologie, CB2, Crate and Barrel, Amazon Go, Saks Fifth Avenue, Office Depot, Walgreens, CVS, Westfield, Cinemark, Hollister, Adidas, the Lego Store, Macy's closing its 95-year-old store, L'Occitane, Sephora, the North Face, Starbucks, First Republic, and AT&T. That's a list of 25 companies that said we're gone. And of course, Tesla is now leaving California and going to Texas.
It's self-immolation on state level.
Right. And what does the Cloward-Piven theory talk about? Remember, we talked about the Cloward-Piven theory? The Cloward-Piven theory is something that people need to read. And I strongly suggest it. Google it. It's
Okay.
Francis. It's Richard Cloward and Francis Piven, and they were professors at Columbia. I'll just read four topics or four key points of the Cloward Piven theory, and you say to me, "Is this shit happening?" Number one, overloading the welfare system. The strategy suggests that by enrolling large numbers of people in the welfare programs, in particular in the large cities, and a large amount of people, how about 20 million? The system would become overwhelmed and eventually collapse. This would create a political and social crisis that would necessitate substantial reforms. Number two, creating a political crisis. The goal was to generate a crisis significant enough to push the government to adopt more radical measures and address poverty and inequality. The number one and two economic advisors of the U.S. government, Jared Bernstein, who advocates for losing the reserve status, and the modern monetary theorist, Lael Brainard, both are MMT theorists, are both inclusionary economists, meaning redistribution of wealth. Number three, advocating for guaranteed income, redistribution of wealth. Cloward and Piven proposed that the ultimate solution to the crisis would be the implementation of guaranteed annual income for all citizens, ensuring a minimum standard of living and reducing poverty. Four, mobilization and activism. The strategy emphasized goals to create a new loyal voting bloc out of the rapidly increasing number of welfare recipients and their children who can all be counted on to vote for larger government in the future. Well, that sounds like where we are. 20 million people. They're not going to vote for Trump, who wants to deport them all. You think about the cloud. Who went to Columbia? Obama and Jared Bernstein, along with Madeleine Albright, Bill Barr, Eric Holder, the current Secretary of State. What's his name? Eric. What's that? Yeah, Bilkin. All of these people went there. Blinken, whatever. They all went there. And does that mean that they understand the theory? I don't know. You tell me. So my point is it too stupid to be stupid, or is this planned? And part of me, honest to God, feels like it's planned, man. And that would be the question I would ask. Am I that far married to my own ideology that I wonder, is this planned, or could it actually really have been planned?
Right. So my last question from my last guest, Jason Hartman, I don't know if you know who he is. He's a big real estate expert, but he wanted to know.
But I'd ask him about, what's the price of oil going to do?
Well, I think oil will be priced in a currency that I think oil is being remonetized across the globe, and it's moving away from settling in US dollars. Ultimately, the price of oil goes much higher. Look, I mean, if I were just going to make a blanket statement about oil or about just about any asset, I would think that what we see would be a massive commodity boom, a commodity super cycle. But
Right.
not just that, I think you could see the stock market go parabolic because the dollar is losing so much value.
You saw that at Weimar Republic. Everything went up.
But as the stock market goes higher and higher and higher, it actually loses ground in its relation to gold. And so I think that is the key takeaway here, is that, if I had to guess, that's exactly what happens. And oil will be with it. It will go to the moon in a dollar that doesn't buy you as much. So I would think that things go higher than people think possible. But all of these things, whether we're talking about oil or gold, or excuse me, oil or stock market, they all lose ground in relation to the price of gold, or to the number of ounces of gold it would take to buy the Dow or a barrel of oil.
Right. Well, Andy, I know you've got to split it a bit, but thank you so much for coming on. I've got to recommend
I love coming on, Danny. You get it, brother, and I'll come on as often as you'll have me. You're one of the few who get it, and I appreciate it. And I've had nothing but good experiences talking with your listeners, and it's an honor to be part of what you're doing. And I thank you very, very much for allowing me to be a small part.
100%, 100%. And I'd like to remind my audience, hit that like button, hit that subscribe button if you enjoyed this content. Also consider Miles Franklin as your gold and silver source. They are my gold and silver source. Tell them that Capital Cosmos sent you in the subject line, and you will get a special pricing sheet that you won't find on the website. Yes. No commitment necessary. Andy, any other things you want to drop before we sign off?
Well, I mean, just trust your gut, man. It's time to be a contrarian. If you're not a contrarian, you're going to end up being a victim. And I do mean that. I wish I didn't. I have 3 kids, man. My youngest is 17. I think it's time to batten down the hatches and prepare, not just with gold and silver, have some small bills on hand, food and water, batteries, home protection. Just get ready, because if this all busts, the first thing we're going to see is a huge contraction of credit. And as credit contracts, I'll leave you with this last thought. Think of how much credit it takes to get a loaf of bread to the store. I've said this recently on a few shows. The farmer who plants the seeds to grow the wheat and buy the combine and the diesel fuel, well, he's on credit. And he tills the field and harvests the crop, and he has all this wheat, and he gives it to a trucking company who's on credit to finance the trucks and pay the salaries and the diesel fuel and whatnot. Who brings it to the flour mill? Who's on credit to run operations? Who then gives it back to a different trucking company who's on credit, and then brings it to the baker who's on credit to bake bread and keep his operation going, who then gives it to another trucking company who's on credit, who then brings it to the grocery store who uses credit to stock their shelves. The amount of credit that touches just a loaf of bread from start to finish is extraordinary. And you start to see banks fail and things get crazy and banks start to contract and credit to contract. And you got all these banks that are loaded with commercial real estate loans that are blowing up. You need to prepare and hope you never need to, what's the worst thing that happens?
Yeah.
You give your food to a food shelf or eat it. You drink your water. You never fire your gun. You give your gold and silver to your kids. You're prepared. What's the worst thing to happen?
It's insurance.
Right.
It's just insurance.
Right.
And you want to
That
talk
would
about
be
money
my-
velocity? Yeah,
Yes.
I was gonna say, you want to talk about money velocity? You just explained credit velocity. It's turnover rate of credit.
Yes.
Yeah.
Start now. You're late in the game. Start now. Hope you never need to be prepared, but damn it, you'll be really happy if you are. And it could be a very big problem if you're not. That would be my thought, because after what I saw Saturday, watching it live, and as far as I'm concerned, we're on the cusp of nothing surprising me. But I meant what I said. It's an honor to be with you, Danny. And I'm really, really glad that we've met. And as long as you'll have me, I'll be here. And you have my word that we will treat your subscribers with special care. Make sure they get a special price. Answer any questions they have. No obligation, no pressure. And it's just my honor to be part of what you're doing. So thanks for having me. And I hope to come back with you real soon and pick up where we left off.
Fantastic. Well, there you have it, guys. If you enjoy this content, give it a like, subscribe to the channel, email info@milesfranklin.com and tell them the Capital Cosm sent you to get special pricing that you won't find on the Miles Franklin site. See what they have. Give it a shot. You don't have to, no commitment necessary. They're not going to bombard your mailbox with spam or anything like that. Just take a look. And with that said, I will catch you in the next episode. Bye, y'all.